Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's take a look again on the gold market. So on the gold, our view on the daily chart is suggests that we do not deny the chance on upward action. In fact, the deeper retracement on the gold stands in a row with our longer term views. On the dollar index, as you know, we suggest the reaching of the 87.4 target, suggests new lows on the dollar index, which should support the gold. And in the perspective of the couple of months, would not exclude the chance that maybe we could see gold around 1950 or significantly higher levels that stands currently. But at the same time, the thing that we feel a bit uncomfortable currently is the overall shape of the price action that stands in the gold. And it's perfectly, we should get some clear reversal pattern. Well, right now we don't have it. And that's the things that makes us feel uncomfortable with taking the long position immediately. So we said yesterday, and in general in the weekly report, we talked about this, that it's possible to take in the long position inside of the rectangle. But it carries a bit greater risk than usual because you will have to be prepared to the situation if market hits the major target around 1650. And in this case, the bullish context will not be destroyed, but that carries in general significant risk compared to the current price on the market stands, so approximately $100 per contract, so significant risk in the gold market. Still, in a very short-term perspective, tactical situation, tactical sentiment turned bullish by the few moments. As you know, recently we've got the CPI release, and the general numbers have shown not really bad inflation, but market was preparing to that, and in fact, it anticipated higher inflation ratios, and mostly numbers were in a row with the expectation. That has reduced the inflationary pressure on the market and pushed dollar lower, dropped the interest rates as well, and on the background of this action, we suggest that gold indeed could try to take it out of this top and continue upward action. So at least this setup will be valid until market stands above these lows, above the lows of the previous session. On the daily chart, you can see market has formed by this action bullish reversal candle. So market created the new lows and then returned it back up and closed above the top of the previous candle. So that calls as reversal session. Unfortunately, we haven't got the bullish grabber, but still reversal candle is also not really bad. What is more important is that on the interest rates, you have the same reversal session as well. And it also suggests that market could try to challenge the previous lows and show a bit deeper retracement. In general, guys, as we talked about the dollar index, we could say about the same about interest rates, because here our long-term suggestion is that target stands 198, but as market stands at the first upward swing on the weekly chart after long-term downside action, we expect that the deep retracement should happen sooner rather than later. And maybe that could become the starting point for that, as the dollar also is dropping lower. So currently, overall background, short-term background stands positive for the gold. And here, on the 4-day from chart, you could see reaction on the 30% support. And in general, currently, as I said, the very short-term setup mostly is based on this most recent upward action with the important validation point right at the lows of this pattern. It means that on an hourly chart, we could keep an eye only on most recent swing up to set the levels where theoretically it is possible to take the position. But here we have two possible ways. So it will be nice if we will get some kind of a hand and shoulder pattern here, right? So it could become left shoulder, head, right shoulder. If market will show the pullback somewhere to the 1740 at least. I'm not talking about 1730, 1735, but at least 1740, 30% pullback. If it will happen, it will be a nice chance to keep an eye on the possible taking a long position. But at the same time, I'm not excluding the chance that market could go up immediately on the straightforward upward breakout and coming back to the stop. So this is also possible. So that's why if you intend to buy gold with this setup with the stops below this area, you could consider splitting your position in the two parts, because currently in this price action we do not have real evidence that we will get this retracement. This is, well, not something reversal. It reminds the shape of the hand shoulders, but it's too fast. Mostly looks like the consolidation before a breakout. If we will get this ABCD pattern to the downside, for example, it will be great. It will be lucky. But if not, in this case, market could just starting upward action immediately. And once this difference is very small, so it's actually 1740, currently 1746, you could consider taking some part of the position right now. In the case of retracement, take the rest. So that will be more reasonable approach to the trading currently. Also, of course, no shorts by far. So currently on this recent rally and this bullish signs that we have in tactical time frame, it definitely means that we should not take any new short position here.